The finance minister announced the Finance Bill 2024 on the 23rd of July 2024. Amongst the various reforms, long-term capital gain tax attracted a lot of attention. A new revised reduced tax rate was proposed by Nirmala Sitharaman. It was 12.5%, brought down from 20%. This was a welcome move, but the shocker came when she announced removal of the indexation benefit, especially for the real estate and the land industry. It was a very big shock because removing the indexation benefit, especially for the long holding assets, more than 15 years, 20-year-old asset, they have to be adjusted to the present cost of inflation by the CII, that is the cost of inflation index formula. That is, the formula says price, the acquisition price into the current year CII divided by the CII of the year of acquisition. That gave us the inflation index in adjusted cost of acquisition. This was a very big cushion that reduced the long-term capital gain liability. But the finance minister announced a reduction in the rate of tax, but also removal of this indexation benefit. A lot of representation was made to the ministry, after which the ministry reconsidered and Finance Minister Nirmala Sitharaman introduced a grandfathering provision in order to rectify this mistake. Not a mistake actually, but to give a kind of a comfort to the taxpayers. So in the grandfathering provision, the individuals and the HUF have two choices, whether to adopt the new tax rate of 12.5% without indexation or to continue with the old tax rate of 20% with indexation. They can calculate the tax liability with both the regime and opt for one which is more beneficial for them and which is lesser liability for the taxpayers. I have an illustration in the old as well as the new regime, looking at which you can decide which regime is more beneficial to you, the new or the old. Let us look at the calculation. So friends, here we have two examples. In the first example, the asset is purchased on 1/4/2001, that is, it's a 24-year-old asset. Whereas in the second example, as you can see, it is purchased on 1/4/2020, that is, it's a 4-year-old asset. The date of sale is the same. The cost of acquisition is also the same, that is 50 lakhs, 50 lakhs. The selling price is also the same, 1 crore, 1 crore. Now we are calculating the tax liability, long-term capital gains tax liability as per the new regime as well as per the old regime. Now under the new regime, the 12.5% tax, it is very simple. Selling price minus the purchase price into 12.5%. So that's what we do. Selling price of 1 crore minus 50 lakhs. So the capital gains is 50 lakhs on which the 12.5% of tax rate, it comes out to 6,25,000 and 6,25,000. Whether the asset is a 24-year-old asset or it's a 4-year-old asset, the rate of tax is the same, 12.5%, and the tax liability arising is also the same, that is 6,25,000 and 6,25,000, both in the case of 24-year-old asset or the 4-year-old asset. Now let us see the second scenario in the old tax regime. In the old tax regime, the tax rate is 20% with the benefit of indexation. These are the indexation indexes, that is 100 and 363. In the case of 2020, it's 301 and 363. Let us see the calculation. Here, it is the indexed cost of acquisition, right? So selling price minus the indexed cost of acquisition gives us the long-term capital gain. How should we pull out the indexed cost of acquisition? For that, the formula is the purchase price, that is 50 lakh rupees, into 363 divided by 301. This is the formula. So this gives us the indexed cost of acquisition of 60 lakh 29,900 rupees. This is the indexed cost of acquisition. The selling price is 1 crore rupees. So the long-term capital gain arises 39 lakh 70,100. 39 lakh 70,100 rupees. On this 20%, we have got the indexation benefit. On this 20% tax, it works out to be 7 lakh 94,000 is our tax liability. 7 lakh 94,000. Now let us see in the first case, that is for the 24-year-old asset, how do we calculate? Again, the cost of acquisition 50 lakh rupees into 363 divided by 100. This is the formula. This gives us the indexed cost of acquisition 1 crore 81 lakhs 50,000. 1 crore 81 lakh 50,000. The selling price is 1 crore. So the capital gains arising is minus 81 lakh 50,000 rupees. Obviously, it's a negative figure. The tax liability of 20%, it will be 0. So under the old regime here, the tax liability is 0. In the first case, 24-year-old asset, the tax liability is 6,25,000 as far as the new regime is concerned. So in this situation, the tax liability is 0 in the old case. So the old regime is more beneficial when the asset is a very old asset, it's a 24-year-old asset. Whereas in the new asset, which is just a 4-year-old asset, as you can see, the new tax regime is 7,94,000. The new tax regime is 6,25,000, whereas the old tax regime is 7,94,000. Under the old regime, the cost, the long-term capital gains tax is more. It is 7,94,000, whereas as per the new tax of 12.5%, it is just 6,25,000. Hence, in the recent asset of just 4-year-old, the new tax regime happens to be more beneficial for the SSE. So friends, this was a quick example which gave us a clarity that if an asset is a very old asset of 24-year-old asset, then the old tax regime, 20% of long-term capital gain tax with indexation benefit is certainly more beneficial for you as an SSE. Why? Because 20 years back, the asset would have been purchased at a very low price. Whereas because of the inflation, the prices today, the current prices today have increased drastically, increased many folds. The cost of inflation index, CII, helps us to adjust the acquisition price to the current cost of CII. And it helps us to reduce our long-term capital gains tax liability. Whereas, on the other hand, if the asset is a very recent asset, that is 5 years or a 7-year-old asset, and in such a situation where we are selling the asset, then of course, the new tax regime happens to be more beneficial, that is 12.5% without indexation benefit. And this facility, of course, is only available to the individuals and HUF. It is called the grandfathering provision, and this is only available to the individuals and HUFs. In any case, for the private limited companies, public limited companies, partnership firms, LLPs, this facility is societies. This facility is not available. Only the new regime have to be followed. That is 12.5% without any indexation benefit. Even if you purchased an asset 20 years back, 25, 30-year-old asset, wherein the land or building would have been purchased for 10 lakh rupees. And today, if it is sold for 10 crore rupees also, the 12.5% tax has to be paid. So 10 lakh rupees and 10 crore rupees. The capital gains arising is 10 crore minus 10 lakh rupees, 9 crore 90 lakh rupees into 12.5% flat. You will have to pay the capital gains tax. I hope this is beneficial to you to give some clarity on this matter. Please leave in your comments. Please share your views and your thoughts on this. I hope I've been able to give you some clarity on this matter. If you have liked this video, please subscribe, like, and share so that you don't miss out on any taxation related updates. I shall see you soon. Until then, thank you and take care.